you could think to yourself, well, is it somebody that believes that this is a massive underprice against equities? Is it somebody that believes it's a massive overprice against equities? So what is it? Well, to me, if I see it on an uptick, unless equities are massively higher or massively lower, just generally the rule for me is if it's on an uptick into a high print, it's usually going to be bullish, not bearish. And the reason for that's dead obvious. If you came to me, now obviously this print is actually on the market anyway, it's at the price. So I want you to think about it. If you came to me, so let's get rid of this chart for a second. If this is what the index is doing, and you came to me on this particular stock and said, I want to buy, there's a dark pool entry and it's at a price. Wait a second, guys. It's at a price of $5.80 just now, and somebody comes to you and says, in the dark pools, I want to buy 1 million shares. I want to buy $5 million worth of shares. And you're going to look at that and say, you want to buy $5 million. Well, you'll maybe go into the dark pool and quote them maybe this price, wouldn't you? Would that be reasonable? You'd maybe say, well, you know, I don't really want to take the deal, but if you give me a good price for it, I'll take a deal. So in other words, if this is going to be a buy order, the price is going to be above the market, isn't it? For a block print. Because it's the only place that maybe this buyer is going to get filled. Now, obviously, you might say, but if they want to buy, you become a seller at that price. Absolutely. Because obviously, if that buy order starts causing the price to go up, at least I've got a bit of room that I can exit the position. I've got to get rid of $5 million, remember. So you're not going to want the other side of that deal, are you? So the majority of block print buyers in the dark pools, usually, if it's significantly above the size that's available in the marketplace, usually, in other words, a huge big dark pool entry price, a huge big dark pool trade that's printing above the price, it's usually bullish. So when I see a print like that, I'm going to be watching for possible buy trades below the print. So I'm going to be watching down into these kind of areas to see if I could maybe pick up some of the CX stock to try and take advantage of that the information that guy's given me. Would that be again, that would be a reason, I assume everybody would agree that that's a reasonable way to look at the markets. Because if you ask for a buy trade, what are you not going to do? If somebody asks you for 1 million shares in the dark pools, you're not going to quote a price of $5.73 because that's below the marketplace, right? It's below the marketplace. Why the hell would you quote $5.73? Because you're selling at $5.73. The current price is $5.79. You're already losing money. You don't need to do that trade. This guy does need to do that trade, right? So that's why they do that trade at that point. So this is something that you can actually use to trade with. This is something you can actually take into your trading. Look at some dark pool entries that have came through. We had a bit of business on, well, we're looking at CX just now, and there's been a lot of dark pool entries in CX this morning, to be perfectly honest. So the earliest dark pool entries was Snap. So let's take a look at Snap. Okay. The earliest decent-sized dark pool entries were in Snap. So what were they? Well, at 4 minutes past, so around about here, 4 minutes. Wait a second, wait a second, wait a second, wait a second, guys. It's pre-market. Sorry, guys, it's pre-market. So somebody was doing a lot of business on Snap at $53.30 pre-market. Pre-market, $53.30. Somebody did $44 million. So somebody did $44 million pre-market. So if somebody comes in pre-market for $44 million on the dark pools, then you're obviously going to be looking at that saying, well, you know, they're obviously expecting the equity price to go higher. So what are you going to be looking at in that trade? Well, you're going to be looking at it from the point of view of, well, if they're willing to pay that high price, now obviously we can't compare it to the current price at that stage because it's pre-market. But you're obviously going to be, if you remember what I said about the other trade, the CX trade, that pre-market trade might get you buying some Snap at bottom edges. You're going to maybe pick up some business at the bottom prints because somebody paid 44 million at the top print. And obviously you can see that into the bottom edges, somebody does keep snapping up Snap at those bottom edge prices. And you can see that if you'd bought Snap at these low prints, you've done pretty good business, right? The one that came out right on the open was INFN. Let's take a look at INFN. So right on the open, somebody came in for this stock at $9.84. $9.84 right on the opening bell. So that was above where the price actually opened. So the price opened at $9.73 and somebody came in on the dark pools at $9.84. So you're looking at that saying, why did somebody pay $9.84 for that product? That seems exceptionally expensive, really. Because you could obviously buy it at lower prices, usually, in the marketplace. Usually you can buy it at lower prices in the marketplace. Now, obviously, in this case, you can see that the price, the equity markets kind of moved about. The price started to drop, but I didn't see any big volumes coming in. That's what you're looking for. If I can find a level with big volumes, I'm going to start looking at it. Now, obviously, when the equity market goes bid, you're saying, well, somebody bought a sizable trade in this. It was about $2 million worth. So when that happens, I'm going to start watching for big volumes down here. But again, you still don't really see the huge surge in volumes that would make this a no-brainer buy trade on this stock, because a big buyer at a high price means, you would imagine, even bigger buyers at lower prices. Make sense? Should be. What about CHNG? Ticker symbol CHNG. It's G, did he? C. This is Change Healthcare. So you can see Change Healthcare was the same. We got a sizable trade literally 1 minute into the cash open. So right on this candle. And it came in at $23.84. Now, we can't tell exactly what that is, you know, because it's not necessarily above or below the market. It's pretty much right on the market price. So it's not exactly somebody's getting any significant advantage with this, but generally dark pools are buys. I mean, most people are, the initiating trade is a buy trade. Now, when you see equities opening gap up, then this could actually just be somebody trying to take advantage of a pairs trade against equities, couldn't it? So if this was a pairs trade against equities, that block buyer for about $10 million could then have sold the equity market against it, couldn't he? And then you see another buying opportunity with reasonable volume at the same price at $23.84. And you can see that you get a very reasonable buy-side response, a very reasonable response up to $24 a share. So if you'd got short the equity markets and got long this particular stock as a pairs trade, you can obviously understand that you could have made some nice money on it, but it's neither here nor there. It's just one of those types of trades, isn't it? Take a look at this one here. This is a GLD, guys. GLD, which obviously is a gold trust, right? So at 27 on this candle, there was a block trade done in the dark pools for $65 million. Now, obviously, you can see that $65 million is a relatively large trade for this, right? The price, however, was 174.83. The trade was 174.83. So somebody did a trade on the dark pools at a price at this level here. You see that? $174.83. So somebody traded $65 million worth of gold trust shares. And obviously, well, the thing is, you don't really know exactly when the trade's taking place, Jason, because it usually they've got to try and report it relatively quickly. I mean, if it was traded yesterday, it should have been reported at the open. It should have been reported at the open, because there isn't an actual exact timetable for when these trades get reported to the exchanges. So it would be very unlikely to have traded from yesterday. But obviously, when that number comes in, it's way above the current price. When that number actually gets reported at 15.27, it's way above the current price. So obviously, when everybody sees that number coming in, when everybody starts to recognize that 174.83 print, the automatic assumption is that somebody bought, because it's nearly always a buyer, the initiator is nearly always a buyer in those types of trades. Somebody's always automatically assuming, my goodness, that was a buyer, and obviously a lot of buyers come in and surge to the upside until that price then gets met at 174.83. So when you see these types of things, I mean, the most recent one that's just came through, these are obviously always delayed. is, we'll just change the ticker symbol. So this has just came through on the wires at $6 million at $29.65. So it's came through at $29.65. And obviously it's coming through from 1043. So it was produced at 1043, which is on this candle here. So it was advised on this candle here. And it was for $6 million. So it's not above the market price and it's not below the market price in any way, shape or form. So there's no particular edge available for anybody to do any business on that one, but somebody did do $6 million bucks worth of trade on that particular candle. And obviously, it just provides you with a block level, doesn't it? At the end of the day, when a lot of people think about this, they say, is it bullish? Is it bearish? It just provides a block price. So what you can do sometimes is you can just draw a line across it and say, well, whether it's bullish or bearish, that we could just draw the line area and we can start working prices against it. So you could maybe have bought, for example, here. That type of thing, that type of trade idea, right? PLTR, somebody's just done 4 million on PLTR. Somebody's just done 4 million on that one. $26 a share. And the transaction was initiated at 1545, which is right there at that price. So this price just becomes a level, doesn't it? It just becomes a possible level. So you could say, well, I'm going to watch it and I'm going to put it on my charts and I'll maybe sell against it, maybe sell against it. So you don't need to make a decision at this stage. There's no reason why you need to go in there and make a decision about what you're going to do. Somebody's just done $35 million on PNC, for example, on the dark pools. PNC, somebody's done $35 million. They transacted at a price of $158.10. $158.10. So $158.10 is just there. Now, obviously, one of the things you do look at is what was the reaction to that $158.10 trade? That was $35 million. What was the reaction? Well, it seems as if the market maker went sell side almost immediately from that block, didn't it? So if the market maker went sell side almost immediately, that's giving you a bit of information that was probably actually a sell block that came in. Otherwise, why would anybody have went sell side? So based on that, you maybe think to yourself, you know what, I think I should be able to work some sell orders perhaps on a pullback here, or whatever. There's a whole series of possible trade opportunities to work against that, isn't there? Eyes, nose, eyes, nose. The eyes have it.